Hi everybody, welcome to the Parallel Systems broadcast. I'm your host Mike. Thank you for tuning in to a very special episode all about the coming revaluation of gold. Now this is part one of a two-part special, so make sure you watch both parts. They're both going to be connected. So in the first episode, we're going to be discussing why gold is going to get revalued. And I'm going to use this article here to help you understand it. I found a fantastic article that was actually written in 2016. Now, I've been predicting that gold will be revalued ever since I started my channel. Now, to begin with, I cut quite a solitary figure. I didn't actually know of anyone else predicting a gold revaluation, at least not for the reasons that I was predicting it and not anywhere close to the price that I was predicting. However, in recent months, I think more and more people are starting to come round to that idea. I think people are starting to understand the consequences of the BRICS monetary system on the value and price of gold. Now, let me just rewind a second. So what we've got going on right now is we have the BRICS plus nations, so China, Russia, India, South Africa, and a number of others that are getting together to create their new monetary system. Now, we're going to talk more about that in episode 2. However, just as a prelude for episode 1, let's just remember what that system is going to look like. It's going to be based on commodities. So that means that all of the countries that join it will have to back their national currency with a commodity. Now, this can be any commodity. It can be anything that they produce. There's a big long list there. However, gold is going to be one of those commodities, and that means gold is going to be put back into the monetary system. Now, China and Russia have been preparing for this for a long time. That is why China has secretly hoarded likely around 30,000 tons of gold. Russia, we know, has probably got at least double, if not triple, quadruple the stated amount. So they've been hoarding gold ready for the new monetary system. Now, one thing that I foresaw very early on was that if China and Russia and the BRICS succeed in creating this new monetary system that is no longer using the dollar as an international reserve, it's using this basket of currencies that are all backed by commodities, that would immediately spell the end of the US dollar. But also, shockingly, it would force the countries of the West who no longer have commodities to pay for commodities in gold. Now, why is that? Well, it's very simple. The countries of the global south and of the east that produce commodities and rare earths, they will no longer accept fiat currencies for their commodities once they are a part of the new system. Why would they? They can accept this new international reserve that is actually backed by real things, so they have no need for fiat currencies anymore. And therefore, the countries of the West only will have gold to put up. Most of them have no commodities, but they do have gold reserves. Now, once I understood that, I could see straight away that gold would have to be revalued at a much higher price because, quite simply, this will be the only reserve asset that the central banks have in the West. Similarly, I thought they would want to revalue gold to reliquify the central banks who are now becoming insolvent themselves. So to get rid of some of their debt, the only thing they could do is revalue the gold reserves. So once again, I could see that in the future, it was extremely likely that they would have to revalue gold at a much higher price. Now, like I said, I didn't hear anyone else discussing this at the time. However, I have been researching this ongoing, and recently I shared with you the article of Sergey Glaziev, who spoke about the revaluation of oil in gold, pricing commodities in gold, and gold having to be at a much higher price tag to achieve this. But then I came across this article here. Now, this article is by Hugo Salinas Price. He's a Mexican businessman, entrepreneur and philanthropist. Now, I know what you're thinking, businessman and philanthropist. This means he's likely one of those psychopaths who goes around and injects people in the arm until they die. No, he's not one of those businessman philanthropists. That is Mr. You-know-who. No, this guy actually seems to be a decent guy. In fact, I was actually listening to an interview with him just this morning, and he spoke all about how the central banks are a mafia, and he called them a global mafia. So I instantly thought, this is my kind of guy, and he gets it.
The central bank is only half Mexican, maybe less than half. Most 2/3 of it is internationalism. The central bank is part of a worldwide mafia of central banks, and they can't do anything that the great mafia does not approve. because they want to be part of the great mafia and not just an independent central bank. And so they don't want to know anything about silver. I've tried for years to discuss with them. It's fruitless. They will not listen to anything that has to do with real money.
Now, he actually wrote this article in 2016. However, he foresaw and predicted many of the things that I later came to discover myself. And I was really surprised to read it, that it was written 6 years ago. However, like I said, it pretty much says everything that I was already thinking. So he was there long before me. So I really was happy to see this. There are people out there who understand where we are going. So I thought I'd share this article with you because it goes through it step by step. So this one is really going to help us understand why a revaluation, and then in episode 2 we're going to be discussing how high of a revaluation. So like I said, watch both episodes. You're going to take a lot away from this, and I think you're going to be absolutely astounded by some of the conclusions that are drawn from these 2 episodes. So let's get straight into it. Hugo begins by saying the current meltdown of the world's debt bubble is likely to continue in the course of the next months. Now remember, he was writing about 2016, so he was a little bit early. However, he could not have predicted that there was going to be another massive crisis, a so-called pandemic, to reliquefy the system with a load more debt. So they kicked that can down the road just that bit further. They kicked that can so hard it's now a rusty, shriveled stump, and they're still trying to kick it. However, we are now in the end game scenario, and we know that because inflation has returned, and all they can do now is either print money to try and keep the system liquefied, or they allow liquidity to drain and then we go into a deflationary depression. Either way, the monetary system will implode. Deflationary depression, which is where we're heading right now, or they print a load more fiat notes, and that will send inflation to the moon. Hyperinflation city is where we are heading. So like I said, Hugo understood this. However, he was slightly early on his call, but trust me, he knows exactly what's going to happen. He predicts it all in this article. And he says the secular trend to expand credit has morphed into contraction and liquidation. So this is where we are right now. He could have written this article just yesterday. Everything is applicable to where we are now. And he says, in his opinion, the new trend is now established and no action by any central bank that issues reserve currencies will do anything at all to reverse that trend. So all they can do is create crises and flood the system with printed money. Then we get hyperinflation, or they do nothing, and then we have a deflationary crash. And he goes on to say the quantitative easing will mean putting money into the hands of the populations through rebate on taxes, invented make-work schemes, or any other excuse to furnish the people with the famous helicopter money to get them to spend. Now, of course, he was dead on the money there too. They've been printing checks in the USA and sending them out to people, these stimulus checks, or stimmies as they call them. Also, we saw the same thing in the UK, MMT. Now, in the UK, it was slightly different. What they did there was give businesses grants. Now, I know for a fact that there were many small businesses throughout 2020 and 2021 that had their least productive year ever. However, it became the most lucrative year ever because they were getting so much money from the state in the form of grants. They were also having employees' wages paid, and many of these businesses were actually operating on top of that. So I know personally from the small business owners that I knew, they were extremely happy during 2020. They said they got more money that year for doing the least amount of work they've ever done, and they were extremely happy. They're not so happy now, however, because the stimulus stopped, and of course, now their businesses are going under. So whilst many of these businesses were overcompensated in 2020, by now in 2022, they are losing money. They are bleeding money because nobody is spending. We're going into a massive recession, worldwide recession, if not depression in some countries. And of course, many of these companies also took out loans on top of the stimulus. The reason they did that is because they were pushed by the government. They were given very favorable rates for credit, and it was also backed by the government through guarantee schemes. However, they cannot afford to pay those loans back because they're not bringing in enough profit anymore because of the slowdown. So it's much easier now for many of these businesses to just close up shop and say, we're not paying it back. We can't afford to. We're not bringing in enough money. It's going to bleed us dry. We're just going to walk away from the business. So that is what the MMT did in the UK. Now, of course, this is only the beginning for MMT. They're going to be printing money to help people with their energy costs, to help people with their food costs. We're seeing this in Greece at the minute. The government is going to pay 10% of all food bills. So this is just going to go on and on and on. We're going to see helicopter money to try and kick that can down the road a bit further. But of course, that's going to lead to the hyperinflationary end. And Hugo says, nevertheless, the present trend of world economic contraction will not be reversed by any ad hoc program. They can only extend it slightly, which is what COVID did. Remember, they printed trillions and trillions of dollars and pounds and yen and euro for the COVID relief, which went to all of these businesses. However, just 2 years later, and we are already back in a massive global recession. So all of this money printing is not stimulating any growth at all. It is literally just kicking the can down the road a slightly bit further. However, look at the amount of stimulus it took. Look how much money they printed just to get us an extra year of expansion. That's all they got for all of those trillions. And that is why they are putting new spending bills up constantly. We had the Inflation Amplification Act, as my good friend John Forrest Little calls it. We also have the new one in the US. And the same in the UK. It's just going to go on and on and on. More money lent, more money printed, more inflation until we hit the end point. And Hugo agrees. He says the world's expectations positive for growth since World War II have now turned negative. And this is an event of such magnitude that no amount of QE will have any effect upon the final outcome. Debt collapse. I absolutely agree with that. No matter what happens now, even if they hyperinflate the currency, to kick that can down the road slightly further, it still ends in a debt collapse, because at some point all you have left is this debt, and there's not enough money in the world to pay off that debt. Remember, we're talking 2 to 4 quadrillion in derivatives debt. Global debt is around 350 trillion, sovereign debt around 75 trillion. So there is no way to pay this off. No matter what happens, there is a debt collapse. The system has so many interdependencies. It's so hyper financialized now that if one entity goes, then that gets passed on to another entity, because everyone is indebted to someone else, and the whole thing will collapse together. Big debt collapse. And like I said, Hugo saw this too. The growing fear in the world's markets arises from the recognition on the part of the indebted, corporations and individuals that their debt burdens are increasing due to devaluations of their national currencies. International investors are attempting to reduce their exposure. Hot money invested in countries which offered higher interest rates now want to go home. In recent years of bonanza, foreigners borrowed some $11 trillion in various reserve currencies to invest in their own countries. So let's just pick that apart for a second. What Hugo is discussing here is how there is a global trend to borrow in dollars or other major currencies like the euro, the pound, or the yen, and then have to earn money in your own national currency to pay those reserve currencies back. What that means is if you're a country, say you're in Ghana, for example, you might be a corporation or you may be a government itself, you might lend lots of dollars from the US. However, there is a big problem here. You have to pay back the US in dollars also, but you only earn CD, which is the Ghanaian currency. That is the national currency. So you only earn in the national currency. And therefore, if that currency devalues against the dollar, that means you have to pay back more. You have to work longer and harder to get the money to pay back the dollars. So let's imagine that the national currency devalues by 50%. That means you now have to pay back 50% more. You have to work 50% more of the time to pay back the dollar debt, because the dollar's getting stronger and your national currency is getting weaker. This is one of the reasons why people often joke that borrowing in a foreign currency is the original sin of finance, because when you do that, you have foreign exchange risk. And historically, this always goes wrong. We've seen this blow up so many times historically. And that is exactly what we've been seeing this past year or so. The dollar's been getting stronger, and therefore lots of other countries, particularly countries in the global south and foreign corporations who have a lot of dollar denominated debt, they are now starting to go bust. They can't afford to repay their dollar debt. So of course, this is going to cascade through the financial system, Every time somebody defaults, it gets pushed onto another entity, and it goes on and on until it reaches a massive global debt pile. Like I said, it is now with astronomical numbers. We're talking in the quadrillions if you include derivatives. However, even without that, we're talking hundreds and hundreds of trillions. So this is something that we have a massive problem in. There is no way out of this. There is no escape. We're going to see countries go bankrupt. Now, I will be doing a separate video on this in the coming weeks because Ghana has some interesting things going on. They are in the process of de-dollarization whilst also defaulting, like I said, on their debts. And another thing that Ghana is doing is they are forcing the gold miners that mine in their country, and there's many of them. There's big ones like Newmont, Goldfields. They're forcing them to sell them gold, a certain proportion of the gold that they mine. They have to sell it to the government, and the government will pay them only in the national currency. So whilst it's not an out and out confiscation, what it does suggest is that in the coming years, we're going to start to see these countries that are de-dollarizing force the corporations of the West that are in their country to either give them something, give them gold, either accept their national currencies like Ghana's done, or they may even do the ultimate and nationalize the mines. This is again part of this whole process that we're seeing take place globally of de-dollarization and moving towards a new system. So going back to the article, Hugo says the debtors are now attempting to pay off their dollar loans, and this has the effect of lowering the value of their own currencies with respect to the dollar. So remember, they're going to have to be changing their national currencies that they're earning into dollars. That's going to have this vicious cycle where the dollar gets stronger and their national currencies get weaker. But of course, this is going to then make their loan even harder to pay back. And Hugo says that this loss of confidence in national currencies has produced a capital flight to the rising dollar. Again, like I said, this was written 6 years ago. However, it could have been written yesterday. It's exactly what's happened over the past year. And he says that because of this, the countries that issue the national currencies are no longer able to maintain export surpluses against the reserve issuing currencies, and thus are unable to increase reserves and are actually losing their reserves. Again, this is exactly what's happening right now. So you've got all of these countries that need to export more goods than they import to build up reserves of dollars and foreign exchange. They're no longer able to do that, particularly now we're going into a global recession. So what does that mean? It means the central banks of those countries are losing reserves and they're no longer able to maintain a trade surplus. Once they can no longer do that, they can no longer accumulate more capital to pay off their loans. And again, this leads to a global debt bust. The export surpluses are disappearing in the rest of the world because the reserve currency countries, including China, are in an economic slump. Essentially, this is all attributable to excessive debt. Now remember, since 2016, we've seen global debt balloon way higher than it was even back then. But like I said, now we are in the end game because we have inflation returning. And Hugo comments on how the loss of reserves on the part of these countries that traditionally have depended on exporting more goods than they import for economic growth and health makes the accumulated debt burden of the world increasingly unsustainable. And investors around the world are worried that some of their assets, which are actually just debt instruments, that is to say, various sorts of promises to pay, may turn out to be duds. And they are now trying to find a way to protect themselves from what they see as a coming debt collapse. Now, to demonstrate this, I always show this graphic here that I made. This is my version of Exeter's pyramid. And what you can see is that almost everything in this pyramid is a debt promise. And it's not just the traditional asset classes like stocks and bonds. It's also things that people depend on to survive. We're talking about things like bank deposits, savings, pensions. All of those things are now part of a Ponzi scheme. They are all made up of debt instruments. And that means when this debt collapse happens, only people who have assets outside of that system are going to survive. Only people that have taken wealth outside of the paper system will have wealth left over. So this is going to be an absolute catastrophe on a scale unimaginable. We're going to see a debt bust that wipes out the wealth of, let's say, 90% of society. People who have pensions, people who depend on national healthcare services, government subsidies, government grants, all of that is going to go. It's all going to come down with the system Commercial real estate, corporate bonds, loans, they're all going to go to zero too. The stock market, most of those companies are going to crash to 95% of their original value. Then we're going to have all of the derivatives and unfunded liabilities. They're out the window as well. And of course, this is likely going to need a hyperinflation just to backstop the system. However, that's not going to stop a deflationary debt bust after the hyperinflation. So Hugo rightly points out that shrewd and wise investors and individuals are now seeking to quietly exit through the back door, and they're buying assets that are going to survive the coming debt collapse. And of course, the number one asset in that bag is going to be gold. Of course, there are some investors out there buying land, Bitcoin, silver, and other commodities too. But the one the central banks are holding and that they're buying right now is gold. And we've seen a massive increase over the past decade of central bank gold buying. In fact, in Q3 of 2020, it was the largest amount of gold bought by central banks since gold was actually a part of the monetary system. So what does that tell us? The largest amount since gold was actually a part of the monetary system, because they know that gold is going to become a part of the monetary system again in the future. They are buying gold because it is the asset of last resort. When this system comes collapsing down, there is only going to be gold left, and that gold is going to become vital for ensuring international trade continues. Now, Hugo says that whatever expedients are implemented, the final outcome of the unprecedented economic contraction in the world will have to be the revaluation of gold reserves, as desperate governments of the world resort to gold to preserve indispensable international trade. So let's just take a step back there. He's talking about this revaluation of gold reserves, and he said that desperate governments, remember, once that system starts to collapse, all they will have to fall back upon is whatever they already own in terms of commodities as a country. And to do trade, it's either going to be a commodity-backed currency or using gold to trade. That's the only thing that's going to be left. And of course, in the first instance, when we have a chaotic collapse of the old system, they will all have to go back to using gold. That's the only thing that's going to be trusted. Now, this is why countries like Poland, for example, have repatriated their gold from the Bank of England. We've seen this from many other European countries too. The reason they're doing that is because they know this collapse is going to come, and they want to ensure that they have their gold at home because they don't want any counterparty risks. And you should take a leaf out of the central bank's books. They're making sure that there are no counterparty risks. They don't even trust one another with their gold holdings. This is extremely important to understand. Counterparty in the coming collapse is going to get a lot of people bent, and there's going to be many people who think that they have their money in a secure investment in gold. For example, they may have vaulted gold, and I reviewed recently the company Glint. However, what I showed was that these companies themselves can be debt pyramids. This company Glint, it's a pyramid scheme. It's full of debt, it has zero equity, and therefore in the coming collapse, or maybe even before then, people who have their money invested through that company are going to find their assets are trapped in a vault somewhere, and they're not going to be able to access it in a crisis, and therefore in the collapse they will have no access to their life raft. And Hugo says the revaluation of gold reserves held by central banks will be the only alternative for countries seeking to retain a minimum of international trade to supply their economies. So just imagine for a second what this global debt collapse is going to look like, just how bad it's going to be. Like I said, we're talking quadrillions in global debt. It's going to bring down supply chains. It's going to bring down the healthcare system. It's going to freeze up the global financial system indefinitely. Now, in that future, the countries are going to have to go back to using their gold just to ensure that they can keep the lights on, the energy grid going, food in the country. Now, of course, they're not just setting up for a reset of the global financial system, they're also setting up for a reset of social contracts. They're going to try and go back to some form of serfdom where the government, the state, and let's face it, it's not the state really, it's the people above the state, the WEF, and whoever is above them, the global kleptocracy and oligarchy. They're trying to reset the relationship so that everyone in society is essentially going to be indebted and enslaved by that elite class. Now, they're all preparing themselves financially for the coming debt bust. They're buying land, they're buying real assets. However, they know most people are going to be trapped within this system and that all of their wealth, or at least their paper wealth, is going to get wiped out. Now, in that future, when that happens, they are planning to put you into CBDCs, a digital ID, where they can completely control you and they can actually exploit you in any way that they wish. They can force these magic injections on you. You will not be able to say no, because if you do, they won't give you your QR code to go and get food. You won't be able to access the shops. You won't be able to access whatever little medical care is left. So this is what the future is going to look like. They're going to have to go back to using gold, and anyone that lives within those countries and becomes dependent on the state will have to enter this new system. So it's a complete reset of the financial system and also a reset of the social contract. And they're planning to take away our inalienable human rights. That's what they want. So what I believe is going to happen is this system is going to collapse exactly like Hugo says it is. It's going to happen in a deflationary bust. After a hyperinflation, then we have a deflationary crash. At that point, I do not think CBDCs will be ready. I think that is the hope of the governments, so that when this hyperinflation is over and the debt deflation ensues, they can immediately put people into a CBDC system that's going to be essentially completely controlled. They're going to use their gold to trade at an international level, but everyone within the country will have to go to rationing of food, rationing of energy. They will have to sign up to these QR codes and digital IDs if they want to exist and survive, because everything else will be frozen up. And of course, that's why I talk on this channel, not just about the financial side of things, it's also about preparing yourself physically, psychologically, and practically for this coming collapse. Because in that moment, you're not going to want to be dependent on the state for food, because if you are, it could be food that has mRNA technology in it. They're already talking about doing this, about putting the magic vaccines in the food itself.
This is part of a broader proposal, bypassing the informed consent process by putting mRNA gene-based technology in foods. You could have a salad and get vaccinated against potential biological threats.
Dr. Aaron Kheriaty is former professor of psychiatry and head of the medical ethics program at UC Irvine, and author of The New Abnormal, The Rise of the Biomedical Security State.
The concept is treating the human being like a piece of hardware that requires mRNA or DNA software updates every few months.
We discuss a frightening transition happening in medicine today, from core Hippocratic principles and informed consent to what's arguably a transhumanist, technocratic medical paradigm.
It's a level of control over people's freedoms that the totalitarian dictators of the past could only have dreamed of.
Similarly, you're not going to be able to get the food that you enjoy, healthy food. It's all going to be GMO, and all kinds of pesticides will be put on that food. Again, it may just be chemical sludge from a factory. It might not even be natural in any way. Other things that you won't have access to in this collapse, well, you're not going to have access to the mass-produced goods that you once did, and we'll get to that in a moment. Now, this is something that many people are simply not prepared for. They think that if they just protect themselves financially, that if they have some assets outside the system, they're going to be okay. Not the case, not the case. This future that they're talking about, it's going to be way, way worse than that. The kind of future they're talking about, it's like taking us back to the dark ages. And like I said, they're going to use their gold just to keep things going, just to keep the lights on. But they're also preparing now, just look around you, they're preparing now for a much more heavily controlled society. And of course, they need to do that because they know this collapse is going to be extremely chaotic. And they want to control you from start to finish in that collapse, so that on the other side of it, the whole social contract has been renewed, as well as the monetary system. So it's going to be extremely important for countries to have some gold in their central bank so that they can internationally trade during this collapse period whilst they build the next system or whilst the new system gets up and running. So this is why central banks are buying gold. It all makes perfect sense. If you think about it, it's all linked together. And Hugo says the amount of gold held by any particular country will not be the most important factor in maintaining operating economies, because even a small amount of gold will be sufficient for that purpose. The reason being that gold coming into newly rediscovered importance, no country will be able to maintain either trade surpluses or trade deficits. So what does that mean? Well, that means that gold will essentially bring back an awful lot of discipline to the international system, because countries that have gold are not going to want to give up a single ounce of gold if they don't have to. So they're only going to use gold for the absolute necessities like commodities to keep their lights on at home or having agricultural products so that people don't starve to death. Whatever it is, we know they're trying to remake the food system, remake energy. They're already setting up for all of this, but they're not going to want to give up gold unless they have to. So therefore, they're going to have to now have a balance of trade. Countries like the US and the UK that have massive trade imbalances will no longer be able to do this, because what will happen is they will drain their gold reserves down to zero. And if you drain your gold reserves to zero, at that point in history, when gold is the reserve asset once more, you will end up like a third world country. You will have mass starvation at home. And of course, it will be an absolute civilization collapse type moment. So countries are going to have to go back to having a trade balance. And Hugo says, the first case would imply that other countries are sending their precious gold to the surplus export countries. But the scarcity of gold and its vital importance in the new system will not permit other countries to lose their gold to the surplus producing countries. And in the second case, the trade deficit countries would immediately correct their activity by devaluing their currencies ipso facto rather than continue to lose their precious gold to cover their trade deficits. And devaluation would put an immediate stop to the excess of imports over exports. And Hugo finishes this section by saying governments resorting to credit creation to fund their deficits would soon find themselves limited to balanced budgets. Otherwise, their budget deficits funded by credit creation would spill over into excessive imports and the consequent necessity for immediate devaluation of their currency. So what he's really talking about here is gold becoming a discipline again in the financial system. Whichever way it happens, it's going to have to get revalued and it will bring immediate discipline back to the system. Of course, this is why the countries of the East have been designing this system to bring back some order to this massive debt fiat Ponzi scheme. They saw what it was, they knew the pyramid was going to collapse eventually, and they said, we are done with it, we are sick of it, we are sick of having the US use the financial system as a weapon against us, forcing countries to enact war and go along with the US agenda to continue its hegemony, and also for the US to have this exorbitant privilege to print the dollar and force all of these countries around the world to give it real things for paper, for something that has no intrinsic value at all that they can print at will. So all of these countries of the BRICS nations got together and decided to make a new system in which no one country will have the power. It will be spread out across all of the countries together. However, countries like China and Russia, who have massive amounts of gold stored up, and of course, in the case of Russia, huge amounts of commodities, although China have an awful lot too, those countries will naturally be on top because they have a much higher share of international trade and larger GDP. So of course, that gives those countries a preeminent position. However, all of these other countries that have an awful lot of commodities too, that in the American system, under the US empire, only got to have their commodities taken from them. They did not see any enrichment from the process. Those countries will now have a much bigger seat at the table because they're going to be able to use their national commodities to back their currencies. So whichever way this happens, whichever way this shift happens, gold is going to get put back into the system and it's going to favor the countries of BRICS much more than it does the countries of the West. Those countries are going to have a big debt deflation, much worse than the countries of the BRICS nations who have already started to extricate themselves from this system. They are already semi-self-sufficient too. If you haven't noticed, China's been buying up massive supplies of global commodities, of rare earths, of agricultural products. They are preparing for the debt collapse. They are preparing to ensure that their citizens are going to be fine no matter what happens. Russia too. Over the past decade, Russia has essentially become the prepper nation of the world. They have massive reserves of gold, massive reserves of food, massive reserves of energy commodities. They've got everything they need to survive the coming collapse. Of course, they are now at war with NATO and the US because the US is trying to bring down Russia and China and this new monetary system, because of course they know full well that once this new system is up and running, it's going to spell the end of the dollar, and it's immediately going to ignite the collapse of Exeter's pyramid. Now, many of the citizens of these countries are going to be very, very angry at that moment. They're going to realize that all of their money is being taken from them. They're going to see a collapse of industry across the country. Supply chains are going to break down. And the government is going to step in at that point and want to control the situation. So why do we have things like lockdowns? Why do we have all of these new social controls happening? Well, there's your answer. It all links together. It's all preparing for this coming collapse. So you have to connect the dots for yourself here. You have to see all of these strange things that are happening and then put it in light of what's happening in terms of the global financial system. And when you do, you will all of a sudden realize that they are setting us up for what's about to happen. Now, the good news is that if you protect yourself properly, you can not only survive this coming collapse, you will actually come out on top, at least comparatively speaking, and you will also retain a significant amount of independence. And you'll also have more capital to buy up cheap assets when they are on a fire sale as this whole thing comes cratering down. Now, going back to the article, Hugo says that only gold producing countries at this point will be able to run trade deficits, and it will be limited to the amount of gold they produce to pay for such deficits. So we're going to talk about that more in part 2. And he says, thus, the revaluation of gold will have the beneficial effect of restoring the world to a healthy condition lost a century ago of balanced trade and balanced national budgets. Now, like I said, this was written in 2016. So whilst he is correct that it will take us back to a more orderly system, it will get rid of this disgusting fiat Ponzi scheme that has been used to impoverish and essentially enslave us. Because remember, all of these agendas, all of these global psyops can only happen with printed money. If they couldn't print the money to fund them, they couldn't happen, and therefore we would all be living in a much freer world. So that's the good thing. However, the big problem is they are essentially printing as much money as possible now to create as much crisis as possible now to get this new system, this new control grid up and running, so that once we go back to this more orderly system, it will be too late for us. We're going to be trapped in CBDCs. They'll go back to using gold. They'll go back to a much fairer international system, but we will essentially be impoverished and enslaved. So this was written in 2016, long before the lockdowns and all of that nonsense. So yes, he's right here. In one respect, we will go back to a much healthier global financial system, but he doesn't realize also that there is this tyrannical element that is also being attached to it. The discipline of gold as reserves backing currency at a revalued price will restore order to a world that has refused to adopt the necessary discipline in the desperate situation now evolving. There will be no other alternative but to accept the detested fiscal and financial discipline imposed by gold. Now, I agree with that because the BRICS countries are already creating a system that is going to go back to a backed currency, a commodity-backed currency. And I'm going to speak about this a lot more in part 2 about why gold will be the most important asset in that currency. And Hugo says, we do not know the true amount of gold held by the world's central banks because it is a closely guarded secret. However, we do not need to know the figure. Whatever gold there is in central bank vaults will be sufficient for the reasons we have already given. Nor do we know what price in dollars the price will be set, or how it will be set. However, given the truly astronomical amounts of debt in existence, like I said, we're talking around 75 trillion in sovereign debt alone. So what Hugo says here is an extremely high price will be necessary to liquefy the system and make payable remaining debt. And remaining debt will be whatever debt is left over after the purge that is now in process is over. So once we have this global debt collapse, there will still be an awful lot of debt, particularly sovereign debt. That's not going anywhere. The money that is owed to the central bank by governments, that's not going anywhere. So in the very least, they're going to have to revalue gold just to cover that debt. And he says the very high price of gold will mean that all debt instruments will be subject to large losses in terms of gold value. And the revaluation of gold will reduce the weight of the present debt overhang upon the world. Now that's another key line there. That's another bombshell part. So the very high price of gold will mean that all debt instruments will be subject to large losses in terms of gold value. So let's imagine, for example, there is a house that at present has 100 grand mortgage on it, $100,000 mortgage. Now at present that mortgage is worth maybe 60, 70 ounces of gold. However, if gold was substantially revalued, all of a sudden the debt on that mortgage might be repaid in something as little as 3 or 4 ounces of gold. So just like he said, the very high price of gold will mean that all debt instruments will be subject to large losses in terms of gold value. And if you have gold at that point, you'll be able to buy up assets extremely cheap, particularly assets that were leveraged. Remember, everyone's going insolvent. They'll have to sell off those assets. You could pick them up for very low prices. And he says also the revaluation of gold does not mean that the prices of goods and services will rise in tandem with the gold price. Established prices will by and large remain the same prices that existed before the revaluation. However, prices will have to be readjusted to reflect the new economic realities. Many goods that were taken for granted will disappear as their artificial cheapness vanishes. Now again, this is extremely important to understand. Many people on my channel get mistaken here. They say when I talk about a revaluation in gold, what I'm really talking about is a devaluation of the fiat currencies, but that is not what I'm talking about. Yes, historically gold has gone up in tandem with the devaluation of national currencies. Therefore, gold could be seen as staying static or fairly static in value. And what we really were seeing was a devaluation of the currencies. But that is not what I'm talking about here. What I'm talking about is an actual revaluation of gold so that the gold will buy you more real stuff once it's been revalued than it did before. So that's key. I'm talking about an actual revaluation, not just a devaluation in terms of the fiat currencies. Now, why is that? Well, quite simply, at present, everything is valued in fiat notes. And those fiat notes control this big Ponzi scheme. And therefore, we have lots of artificially cheap items. For example, we've been getting cheap items from China. They're made using slave labor. And essentially, the fiat Ponzi schemes allows us to buy that technology at a massively reduced rate. It's the same with food. We can get food fairly cheaply. And of course, I'm talking about before inflation kicked off. However, all we're really seeing right now is the real costs of food, the real input costs. Because before, the fiat Ponzi scheme allows people to push the prices lower. And therefore, we can afford to live within the fiat Ponzi scheme. What's going to happen after the collapse of that scheme is everything's going to have to go back to being valued in the true money, which is gold, and gold will have to accommodate for all of the assets on earth. I'm talking about the real assets. We're talking commodities, we're talking land, and that requires a much higher price of gold because there is only a limited amount of gold. So therefore, gold will get revalued substantially. However, there will be lots of commodities that go up too, because remember, they are still real assets and the gold's going to be used to buy them. So they may be revalued at a higher price too, but gold will be substantially revalued because that is the metric against which everything else will be measured. On the other hand, we will see massive shortages of goods. Remember, we have lived through an extraordinary period of history where cheap goods were being manufactured all across the East and they were flooding to the West, and we was able to have these massive trade deficits and we paid very little for these goods because they were made so cheaply by these countries. Well, that's all going to stop. All the prices of all the inputs for those things are going to go up substantially, and therefore we will no longer have these items in the West. So all of this stuff that we've become accustomed to, cheap furniture, the ability to buy tools, the ability to buy handbags and clothes, all of those things that we got super cheap because they were made everywhere else in the world, that's all going to come to an end. And this is one of the reasons why I keep telling people you need to start stocking up on all these things that you're going to need in the coming decades. You need to buy those tools. You can buy them all super cheap right now. You can go to a secondhand store, buy secondhand tools. You can get all the power tools that you need. You can get off-grid energy. We like to go and buy lots of real clothing. I'm talking about real wools and real furs, because all of that stuff's going to disappear. It's all going to go. You're not going to be able to buy anything new. And then the next thing that's going to happen is people will start to buy up all the second-hand supplies, and the prices of those things are going to go up astronomically because all of a sudden there will be no supply and huge demand, and people will be willing to trade, barter, or give whatever the hell they've got to give to get those items. Now, right now in the West, people do not know what is about to hit them. So you could still go out right now and buy, for example, like we did recently, a fur jacket made from real fur, something that's going to keep you warm in minus 30 degrees, like what we get over here. You're going to be able to buy that for a few pounds. You can still buy matches for 9p in the supermarket. You can still buy second-hand tools for 20p, or in the US dollar we're talking 50 cents, 70 cents, because these things are in abundance right now and people can always go out and buy new things. Well, that's all going to stop. And when this system comes down, we're going to have a revaluation of everything. And everything that's real will all of a sudden shoot up in value. We're already seeing it start to take place. Everything that's paper is going to go to zero. Everything that's real is going to shoot up in value. And it's going to be a whole global reset of the values of commodities, of items, of goods. And what we're going to find in the West for the most part is all of the things that we valued will actually value less. And we actually see this not just in goods, but also in our morality. We've become valueless. This is why we are on the precipice of collapse. And all those things that we valued, I'm talking about things like digital assets, I'm talking about things like Netflix, I'm talking about things like cheap, tacky IKEA furniture, I'm talking about paper assets, Kindle books, MP3s, all of these things that don't actually exist. I'm talking about cheap jewelry, cheap clothes. All of that stuff is going to be revalued to its intrinsic value, which is zero. And all of the real things that the West has shunned, I'm talking precious metals, of course, real material and fabrics, farmland and agricultural land, forestry. Also, I'm talking about items like tools and furniture. I'm talking about quality goods that are produced with real materials that take significant amounts of effort. All of those things have become devalued in the West, and right now you can pick up a lot of it for massively discounted prices. Well, that's all going to change. We're going to see a complete inversion of that in the West as things get revalued to their true intrinsic value. How much effort does it take to produce it? How available is it in the new world where nobody is exporting anything but the essentials? Now, in closing, Hugo says that the oil producing countries will have to adjust the gold price of their oil exports to balance with the gold price of their imports, plus the gold value of their investments abroad. Now, it's very, very fascinating, isn't it? Because recently I shared this article with Sergei Glaziev where he discussed the plan of Russia and BRICS nations to start pricing their oil in gold and also having to revalue the price of gold to match the price of oil. So what Sergey suggested in that article, which I did a video on, was that they're going to go to pricing oil in grams of gold, and that will immediately revalue the price of gold to $3,000 per ounce. However, that will just be the start. That's exactly what I said in that video. If you haven't seen that, you have to go back and watch that. You really need to go through all of my videos on this to truly understand where we're going here. So begin with the BRICS Plus video. That is the first video I did on it about 4 or 5 months ago. Then go to the recent video about China, gold revaluation. Then my recent video all about the Sergei Glaziev article about the revaluation of gold and also about pricing commodities in gold. And then you will be able to understand this video and the next one in much greater detail. So that is it for today's episode. I hope you found this one fascinating and I hope you're excited to see episode 2, where we're going to be talking about how the revaluation might happen and how high this revaluation might actually be. So that will be released later in the week. I also have a fantastic interview coming up tomorrow night with John Forrest Little. John is one of my favorite precious metals analyst. He's also the author of the Pickaxe website, which has some fantastic information on the history of gold and also geopolitics. And John is also a contributor to the infamous Morgan Report. Now, John pulls no punches when he talks, and in this video we talk about the coming energy crisis, the revaluation of gold, the BRICS Plus monetary system. We also talk about totalitarianism, and we even talk about cats. Now, this was a fantastic interview. I know you're going to love this one, so that one is released at 8 p.m. Greenwich Mean Time on Tuesday, the 10th of January. So you can look forward to that one. If you would like to find out more about the coming gold revaluation and you'd like to hear more about how you can protect yourself and prepare for what is about to happen, please check out my Patreon. I will be doing an audio newsletter all about this topic where I'm going to go into it in much more detail and I'm going to give more specific advice for my patrons, as I always do. And I hope to see you back for part 2, where you're going to get to hear my shocking reveal as to how high I think the gold price is going to go after this revaluation. Have a fantastic week and I look forward to seeing you in the next one.